Okay, so what lot size should you trade with? So by the end of this video, you'll be able to understand exactly what's the number that you should use to trade so that you won't blow your account, okay? Because there are people who ask me, Karen, I have a $5,000 account. Then what is the lot size I should trade with? I cannot give you an exact answer because it depends on a lot of factors. It's just like if you're 50 years old and then you say, Karen, I want to buy my first car. What car should I buy? Depends on a lot of things also. Same thing with lot size. You need to look at 5 factors. So the first factor is it depends on your value per pip. Now the formula for value per pip is the amount of decimal places for that currency times your trade size divided by your currency pair market price. Or you can just say current price, okay? So of course, if you dig deep into it, it depends on your trade size, it depends on the currency pair that you are trading, which will all determine what is the value per pip. So if I give you one example, today if you are trading euro dollar and you are trading 10,000 units of euro dollar. So euro dollar is measured in terms of 4 decimal places, 0.0001 times 10,000 units divided by current market price. So as of today, it is about 1.18. So what answer do you get from this? The answer is 0.847 in terms of euro, not in terms of USD. So you need to change this to USD. So how do you do that? You need to take this answer and then times the current market price, which is 1.18. And if you pay attention in secondary school, cancel, your answer would be $1 per pip. So 1 mini lot is equal to $1 per pip for euro dollar. So of course, if you dig deep into it, it also depends on your leverage because your leverage will determine your trade size. So if you leverage more, you control more currency. You leverage less, you control less currency. And then the second factor you need to look at is your percentage risk per trade. How do you determine your percentage risk per trade? Now in the trading world, people give you a choice from 1 to 3%. If you are super conservative, some people would risk less than 1%, like 0.5, 0.125. But basically, how do you determine whether you should risk 1%, 2% or 3%? One of the main factors is what is your experience. The higher your experience, then the higher the percentage risk per trade you can use. The lower your experience, then you should risk a lot less. So the tricky part about percentage risk per trade is it not only depends on experience, but it also depends on another thing, which is your risk appetite. Like, are you more of a Lamborghini driver or are you more of a Toyota driver because you just don't really like driving fast? You like to take it slowly, even though you're late for work. So the tricky part is some people, they have a low risk appetite, okay, but they are super experienced. So if you have a low risk appetite and you have a lot of experience, then what should you do? Should you set your risk per trade based on risk appetite or experience? The more important factor is your risk appetite, okay? So to put it simply, if you have low risk appetite, low experience, then you risk 1% or less than that, okay? Then if you have high risk appetite, high experience, then you can afford to go up to 3%. Or if you're somewhere in between, then 2%, 2.5%. So around this number. But if you have low risk appetite and high experience, then you should stick to your risk appetite. Risk 1% or less than that. If you have high risk appetite and you have low experience, then it's still better for you to risk 1% as a start, but then you can gradually increase it to 2% when you become more experienced, and then finally to 3%. So this is just a general guideline. It's not like a black and white fixed rule. Make sure you be flexible with that. Number 4, it depends on your stop loss. As a general guideline, the wider your stop loss, the lower should be your lot size. The lower your stop loss, meaning the tighter it is, the higher you can set your lot size. Because these two, they are inversely proportional. Because if you look at how you calculate your lot size, the formula, percentage risk per trade times your capital, then divided by value per pip divided by stop loss. So these two are inversely proportional to each other. Okay? Nowadays, you can just do everything online. You can even install a software to your MT4 platform where you just need to key in this one and this one, then everything will be calculated for you. So the final factor is, do you scale in or do you enter everything all at one go? Let's say if today your lot size should be 1 standard lot, but you're a trader that likes to scale in. The first trading opportunity, you will open a lot size of 0.5. Okay? And then as the price moves in your way, moves in your direction, then you open another trade and then you open it at 0.5 again. Of course, you can scale in many different ways. Maybe you can start with 0.2. Okay, and as the price progresses, you can scale in 0.3, then 0.5, 0.6, and so on. Depends on your strategy. So normally traders who like to scale in, they are trend followers, because if you are a scalper, day trader, like you can only take so much in one day. Like, what are you scaling in for? Now, a lot of traders, they make 3 very common mistakes when it comes to lot size. Okay, and I see it way too often, and I also made them when I first started out in my trading career. First mistake that I see a lot of traders make is they don't bother to calculate. They just estimate. Like a lot of people, they just estimate their lot size. Okay, I'm trading with $1,000 account. Since other people are trading with 0.1, let me just trade 0.1. And the second mistake, they increase their lot size after a losing streak. It should be the other way around. You should increase your lot size only when you are on a winning streak, only when your account has grown for a couple of months. But then a lot of people do this because they want to recoup their losses, because they want to take revenge. The next mistake is they decrease their lot size after a winning streak. It is human nature to want to take profit fast. There are some people like that. When they are on a winning streak, they want to protect whatever that they have. So they kind of reduce their risk exposure a little bit. It should be the other way around. When you're on a winning streak, when your account has grown, then you should increase your lot size. You want to add to your winners and you want to cut losses fast. You want to protect yourself, trade more conservatively when you are losing money. If you're still not clear about things like lot size calculation, you want more examples, you can check out this video. So with that, talk to you in the next video. Bye.